So the question is the SPY going to crash tomorrow or is it going to continue to break out? I'm going to show you the best key levels to be buying put options at resistance. I'm also going to be showing you the best key levels to be buying call options at support. This is going to give you a much better understanding on whether the bulls or bears are going to be in control at these key levels and what to look for heading into tomorrow. Is it going to be a breakout or a fake out? If it's a fake out, where should we buy the dip? If it's a fake out, where should we buy puts at the resistance? I'm going to show you how to do this. Let's get straight into it. This is going to be a good one. So in terms of the SPY, this is what I want you to understand. The SPY ended up having a gap fake out, you can say, in a sense today. So what is a gap breakout in the first place? Well, what you do is you find a stock that ends up gapping down. Once the market closes, you take the high of day. You can see right here, the high was 383.38 on a day where SPY opened up lower than it previously closed. So if a stock opens up lower than it previously closes, that means it gapped down. And what makes this gap breakout level special is it's a special type of breakout because if the SPY goes above this, it is going to start to fill the gap. There's a gap to fill above at 386.23, which would be your best level for puts. If the SPY did end up breaking above this key level and turning it into a floor and into a support level. Now, what would occur if SPY had a gap fake out? This is what would occur. The SPY would start to sell off and it would start to fill the gap below. You have a gap to fill below at 376.66. So here's what we know so far. We know the best price for puts possible in terms of tomorrow would be this like 386.23 gap fill level. Now we do also know that the SPY is currently gapping down during extended hours. It's having a small gap down. This can flip heading into pre-market, so we're going to see how it reacts in the pre-market. But the SPY had a lot of support towards that gap breakout level that we discussed, and it had a small little breakout, but it ended up attempting to crack, and now it's slightly cracking below, trying to fake out. So here's what I'm seeing. I'm seeing that the SPY is on track to gap down tomorrow. If it does, there's going to be a gap to fill in the middle above at 383.44, which is the previous closing price. So SPY is going to have this gap at like 383.44 if it does gap down, if it opens up lower than it previously closes. If it retests 383.44, reacts as a resistance, and you see it go under 383 after the retest for a green to red move, then it's going to be puts, it's going to be a fake out, and it's going to crash to right around here, $381.60. If it goes under that, then it goes to 379. 379 is also a special level. This is what we call a gap breakdown level. If the SPY, so a gap breakdown, this is the opposite, this is the inverse. You find a stock that gaps up. Once it goes under 379.10 and turns this into a resistance level, into a roof, like it tried to do into the close right here, bearish reactions, then it's going to start to fill the gap below at 376.66. That's a special key breakdown. So, Will, what are the best levels to be trading at heading into tomorrow? Well, the best level possible for puts, if the SPY breaks above this previous closing price, 383.44, reacts to support and goes bullish, best level to be trading at for puts would be $386.23. Do not get caught up in a squeeze. Respect stop losses. Our second best level is this 383 level. This is make or break. If the SPY ends up spiking back up, it goes green, then it goes back to red, forming lower highs, forming resistance towards this 383.44. Then the 383 puts are going to print, and we're going to see a crash to 381.55. 381.55 is make or break, man. This is make or break. You can see right here, this is a make or break support level at this 381. The SPY sold off very, very hard recently when it went under 381, and you could see the same day it started to go right back to the support level, and there's a gap to fill below. So this 381, we're going to call it 381.50 to 381.40. We're going to call it 381.40. 381.40 is make or break support. If it cracks and reacts as a resistance, SPY is going to take a big hit, and it's going to go to that 379. If it goes under that, then it fills the gap below. If it holds 381, this is not over yet. The bulls are going to step in and they're going to run it back up towards that previous closing price of 383.44, which is make or break. So our make or break resistance level right now is 383.44. If that reacts bearish, we go to 381.40. If that reacts bullish, we go to 386. 386 if it reacts bullish, best level for puts. And if 381.40 reacts bearish, then we go to 379. It's going to try to crack and fill the gap below. If 381.40 reacts bullish, then it goes to 384s. So those are your two make or break levels that I want you to be aware of heading into tomorrow. 383.44 and 381, that zone, right? So if it goes below the zone, then we go to this support level to fill the gap. If it holds this zone, it's going to test the previous closing price. If that reacts bearish, then it's going to try to crack this zone and goes super bearish. If this level, 383.44, reacts as a support level and it starts breaking out, SPY continues to go micro bullish and it starts to fill the gap at 386.23, which would be the best level possible. So basically, for the bears, they need to stay under 383.44 and they need to crack 381. It is truly make or break. So keep in mind, the SPY recently had a gap fake out. Take a look at this pattern. Right here, the SPY ends up gapping down at this 386.50 level. There's a gap to fill above still at 389.63. So the SPY ends up gapping up. See how the SPY gaps up? And then look at what happens the next day. The next day, it gaps down and it doesn't even retrace back to fill the gap. And it continues to go lower all the way to 374. And what we're seeing right now is SPY retested that gap breakout level like it recently did, and it is currently gapping down. So if the SPY does gap down, and as long as we stay under that previous closing price, it's going to be a big day for the bears if that occurs. Just remember, if we push above the previous closing price, no reason for puts. It's going to try to fill the gap above at 386.23, which would then try to bring the bears back into the game. Absolute best level to buy the dip for the call options would be 376.66. The previous this gap right here, the previous closing price. Another key level to be buying the dips, and this would be the absolute best one possible, 374.13. The absolute best level to buy puts if it somehow goes super bullish would be this 389 level heading into tomorrow. But in terms of tomorrow, keep the main levels that I've spoken about on your radar, and those are the key levels that you should be trading at. So the final levels of interest to make trades tomorrow are going to be at 383.44. I'm going to keep an eye on 386 if it flips and reacts bullish. That's where I'm interested in puts. I'm going to keep an eye on 381.50 as well. Those are my three levels: 386, 383.44, and 381.50. That's where the big moves are going to be occurring. Also 376.66 for calls, or even 374.13 for calls. Do not risk much. The way I trade these, I scalp, I get in, I get out. I do close expirations, typically 0 dates. If you want something less volatile with less data decay, do something further out expiration. I stay at the money. So if SPY's at 383.50 and I'm doing puts, I go with a 383 barely out of the money. I like to call an at the money strike, right? I get in once it's out of the money, and I look to scale out once I start to become in the money. My price targets, I aim for like 1 to 2 points. It depends on the trade. Like if I'm buying puts at 383.50 because it reacts bearish, I'm going to start scaling out at 382, and maybe I'll leave some on the ride for 381.50. If it reacts bearish at 381.50, I might look to take smaller size. What you need to understand is you need to be focusing on the best levels possible. And when it comes to puts, key resistance levels, not key breakdowns, key resistance levels. When it comes to calls, key support levels. The lower the better. 374, 376.66 for puts, 383.60, right? 381.50. But ideally higher, 386 and 383.66. The higher the level, the better for puts. The lower the level, the better for calls. That is my analysis. I hope that gives you a much better understanding of the possibilities, based off that pattern that I showed you. If that history repeats itself and SPY gaps down, it's going to be an absolutely brutal day for the bulls if it can crack and turn 381.50. So basically, for the bears to take control for the vast majority of the day, what they truly would need to do is they need to stay under the previous closing price, and they need to crack 381.50 and react as a resistance. If this key level turns into a roof, that's the key level you play puts. That would be one of your best key levels to be playing puts if that reacts as a roof. Also, you could say even 382.80s. We're going to keep an eye on it. You need to be well aware. If the 383.50 reacts as floor, then it flips super bullish. Those are the best levels. That's how you trade the best setups at the best prices. Within Trader Society, we're going to absolutely crush it tomorrow. I've been on a tear. I've been on a great win streak. Just in Power Hour today, I had 3 back-to-back winners, all 50% gains within minutes. I ended up scalping calls twice in Power Hour on dips, and then I scalped puts right before the market closed, all 50% winners. It was a crazy day today, man. It was a crazy day. But yeah, that's going to wrap up today's video lesson. I will see you guys within the next one.